There he is. Welcome to Trader Roundup, Michael. Nice to see you. I like the time, by the way.
Good morning, folks. How's everybody doing on this fine Friday?
It's been a sugar fest. Everyone's been in love with the live stream. I mean, it was a little abrupt today. We were wondering. I saw some screenshots of where you definitely had technical issues today, right? Clearly, something.
Yeah,
And we just kind of came on, and we've been kind of been pretty much just talking, hanging out, doing what we do. But I mean, if you haven't heard of what we've been saying, it's been all really dialed into your live stream and the mentorship and how everyone's kind of feeling. Hunt Trades has had a really good ad. The Specimen has also had a really good ad. He had learned a lot of your concepts through just the spaces. So just trying to get you kind of caught up a little bit on the conversation and
yeah. I
just the vibe.
apologize. I didn't know actually, I was looking at price, and I was like, you know what? It's probably going to take a little bit of time. Maybe just ask him if he wants to start talking. And I checked your profile, and it was already started. So, how long you been going with it? Like, how long has this
Like
been
as
going?
soon as you finished, bro. So I'm gonna say almost an hour, probably at least. I'm thinking. I mean, we called the pre-market high real time with the retrace at 10:20. I'm thinking right now it's 11:12. I'm gonna say you were about 30 minutes. So I'm gonna say 9:50, pretty much the 9:50 macro on. We've been here, I think.
Oh, wow. Wow.
Pretty much, you
So,
were there for 30 minutes. You came on for 30 minutes, and you were there. And then whatever happened, and as soon as you finished, I came on, and we've had some really good, thoughtful conversations just with some folks who have been here a bunch. It's definitely worth going back and listening to. And that's why I'm trying to spend the time and effort of getting you kind of caught up where the conversation's at, because it's been wonderful. It's been a really, really
that's
good
awesome. I'll have to go
conversation.
back and listen
You,
to it.
I believe wholeheartedly you will want to, because Hunt Trades and the Specimen have just really been good ambassadors to everything that we do and everything you do. And a lot of your questions and the feedback that you implore, we don't always get the best responses, but this first hour, we had some really good responses from the Specimen and Hunt Trades. So kudos to those gentlemen. And for anyone who hasn't had a chance to listen, you'll want to go back and listen to this one. It's been good.
Well, obviously, I tried to get onto YouTube, and it would not connect me. So I tried rebooting twice, and it still wouldn't let me do it. So it wasn't an OBS thing; it was YouTube. So I don't know what the hell their problem was today. So I went over to Twitter and did my best in calling, outlining what I was looking at. And when we failed to run for that consequent correction of regular trading hours opening range gap, I liked how it snapped away from it. So I like that run, see if it can continuously grind towards 859 even. And then I gave you some things to watch this morning. Certain fair value gaps. I gave you the inversion fair value gap this morning that was utilized. I gave you the fair value gap as a target. I was recording everything, and then just to prove the Wall Street guys, okay, are full of fucking shit. Okay, the bottom line is this: you can't fight real time evidence proving it. I gave the entire fucking world my stop loss. 2 million people watch my ass, okay? They may not be all in that live stream at the same time, but they're fucking watching, okay? And everybody that fucking sees my stop, they're telling all their mentorship and their signal fucking people what that stop is too. So what it did, it proved they Wall Street guys have no idea what the fuck they're talking about because it happened live. I let it happen. I gave it to you on a silver fucking platter, and then I re-entered. I told everybody, that's fucking Phil. What is Phil? Phil fucks you, knocks you out of the seat, and then takes your seat and rides to the fucking goalpost. There you go. There you go. So, if this was a courtroom, okay, if this was a fucking courtroom, who has the evidence? Opinions of motherfuckers that say that it doesn't happen when you've had it happen to you in fucking trades. But then I illustrate exactly how it happens and then still get right back in that bitch, right on the saddle again, and ride that motherfucker up to 98% of what I was calling for as a target today. How about that? Where's the argument now? If you haven't talked about that this morning, that's what I'm interested in. I want to see what anybody can say about what they saw today. Because I outlined it. I told you the PDA rates. I told you what fair value gap, the 920 fair value gap. I want to see that become an inversion fair value gap. Did your chart show that become an inversion fair value gap? Because mine shows it. Mine shows that, and the price continuing around. So, in case I got a couple of questions sent to me, what does shinobi mean? Shinobi is a term that's referred to as a ninja, shadow warrior. Okay, and I actually trained in Togakareru and Genbukan, so that was something I actually learned that stuff. But a shinobi is basically a ninja. So when Phil did the stop hunt, I moved in ghost mode. I wasn't going to tell anybody what I was doing, but you watching that recording, everything I did. And if you want to see it slowed down and uploaded so you can see every little intricate detail, I'll do that. But I wanted to hurry up and throw it on there because there's no way I can fake that. There's no time for me to fake that. As soon as the stop hit and closed the position out, printed the screenshot right on my X. You cannot fucking fake that. You can't fucking fake it. So you tell me, community, is the evidence there that they can run your fucking stop and then continue to run? Or is it just random bullshit? That's what I want to know.
I love it. Answering that question, Mauricio is he's a good one to come up. That's a legit question. I don't know if we can pose that to just anybody. My boy Mauricio, do you want to come up here and take a stab? I mean, you're like, well, I came up for something else, and I wasn't thinking about that. Maybe.
Quite frankly, yes. But since you called me
Oh, it's
out,
almost like I know you.
I guess I have to
It's
take
so
this
funny.
stop. I mean, no, it's incredible. I mean, it's simply unreal, and that's one of the main reasons I took the time to follow ICT, as I mentioned in my story, um, 3 years ago. And and for me, it's something that for like the session today, I really want to press the button on my live account, but I didn't, just because I was studying it, and I follow the rules and I follow what the mentor says. But yeah, I mean, for me, there's absolutely no questions. I was looking at that 920 fair value gap, looking at the tweets, and even looking at the tweets, and as soon as he tweets, let's say we're going for a direction, we're going bullish, and then he tweets, and then all of a sudden, like 1 2 minutes later, boom, one super bearish candle, and then he just like people just buying that as soon as he tweets, and then just the algo just retracing right away and making it doubt, and then like 3 4 minutes later, he just go back up. I mean, it's just absolutely unreal. I mean, there is for me there is nothing to discuss at this point. I mean, it's actually uh, now when people challenge me in some of the friends discourse that I know, that that supports and resistance. He just I just stay quiet, and I just post my trades and just put just results. That's it. I think that's the best. And now people are saying like, oh, who is Michael? I'm like, listen, everything is for free. He's giving it back to the community, and this is the link. I mean, I don't need it. That's my point. But if I can ask you a question, Michael, now that I took the stop, if you don't
Sure,
mind,
sure.
um, I had a question specifically about NQ and the higher time frame bias. Recently, we had a bearish narrative on the higher time frame, but within a few sessions, price aggressively repriced higher, delivering at this point multiple daily bullish fair value gaps. And in a situation like that, how do you distinguish between a retracement into premium versus a genuine shift in order flow on the higher time frame? And what confirmation will you require to transition from maintaining a very swing bias to recognizing that the price may be rebalancing higher and targeting buy side liquidity?
I admit I don't understand your question. If you could try to say it one more time.
Sure. So we had a bearish narratives on the higher time frame last week, and within these few sessions, we reprice higher, and now we have multiple daily fair value gaps. In a situation like that we're living right now, how do you distinguish between a retracement into premium versus a genuine shift in order flow on the higher time frame?
Well, the only thing I went on was, as I mentioned before, I went on vacation. Um, I think once we get to those lows we were targeting towards the end of March, um, it could turn around and aggressively run very fast for those relative equal highs. And as the daily chart indicated, like the only thing you can do is just hold on to a bullish bias. And anything that has multiple confluences, the things I teach in terms of PD arrays and whatnot, if they're supporting the idea for higher prices, just trust that. And that's kind of like the learning experience I had too with all this, because these are market environments that I haven't ever seen before. Like I've never seen it before. And you're learning it, like I'm learning it, that these things still work, but you got to reduce the list of things that you're going to utilize to frame a context around a trade idea, and not forget that this thing's it's a rocket, and look where we're at today. So I don't have a clear cut. This is what you do in this type of situation, except for just keep expecting higher prices and don't stand in front of it. And the slightest thing that has multiple things in agreement for looking for it to be a discount, use that and be content with that.
Thank you, Michael.
You're very welcome. I'm sorry if I couldn't satisfy you more, but that's the reality of it. And it's not easy.
No,
In these conditions, Michael, would you agree that typically, I mean, within the indices, if we're looking for confluences and the fact that we're in these market conditions, to be a bear or to take a short, that you would be looking for additional confluences versus potentially a long? Is that true in your case?
Yes, I think it should be true for everyone. I mean, that's the right mindset or approach to going forward with it.
I love that. So then definitely the student who is not familiar with, or if they are looking to short in this environment, if your trade, for just an example, utilizes three confluences, for you to go short, you need four. You can't have three confluences like you used to. You need an additional confluence to short right now.
Even more, even more than that.
I
Like
like
you'd
it.
have
I
to have
like it. I like it.
several things, and multi time frame, not just one time frame saying, yeah, I think so. Like it would have to be really, really solid. And like I did on Tuesday evening in the Asian session, I had several things there, but they were anchored to a daily chart. So when all the smaller time frames agreed with it too, with the buy side liquidity, it just made sense for me to do that. And even I'm getting a lot of emails saying, you know, why did you show that? Because you've been talking about the markets. Because I wanted to show where it can materialize. It's not for you to be able to go out and replicate it. It's just for you to understand there are setups that go against this, but they're far and few between that are trustworthy. And that was one I was willing to do. I outlined it. I told you on X, this is what I'm watching, and then I did something with it. So I don't know what else to do. I can't make obviously everybody happy, but you have to really do your own due diligence to protect yourself and have a whole lot of things in your favor right now. And that might require you trading a whole lot less than you used to or want to.
Super important. The specimens had some great conversations. Do you want to tap in the specimen to the conversation? Thank you, Mauricio, as well.
Yes, sir. Okay, so the question I think that Michael presented was about he spoke on the 920 candle inversion, but he also spoke about like how when people say that the market's not running for your stops and what's going on, and how he was able to redirect and go back into the trade. And I want to speak on that because I've definitely experienced that on my side as far as like how I'm looking at the chart and how I enter trades and how my analysis, I'm holding strong to something. I'm looking for my PD array. I get in that trade, and based on the algorithmic principles that Michael teaches, I'm like, okay, I'm on side now for sure. Let's go. I'm not willing this to go there, but I'm just following my functions, using my fair value gap, getting in, putting my stop loss where it's supposed to be, and then I see that almost like hunt candle or that raid on my stop loss. And in the past, I've definitely been kind of frozen, not because I'm over leveraging, but frozen because I'm like, what the hell's going on? So when Michael says about this whole fill is coming in there or the stop loss is being hunted and all this stuff, I'm just like, okay, cool. But it gives us time to now watch what happens. So your analysis may be correct, your entry may be good too, but then you get stopped out. that's just given us, I think he said this, like he always says this, but it's like a premium cost to kind of see what's going on with the market. So just because you got stomped out, it's either going to prove to you that you're wrong and go the complete opposite way, or it's a stop hunt and it will just deliver in your original analysis. And I think it's important as us students to understand that when what I'm picking up of what he's saying is like his 30 years of experience, he's able to look at the market in his lens because he's codified how he's looking at this market for his way. He's Enigma for himself. But because of how much time he's invested in this, when he gets in, he's thinking this is going to my target now. So when he gets stopped out, it's like let me sit on my hands, let me wait, let me see what's happening here. Is the market still showing him that it wants to deliver in his direction? So when he's able to get back in, it's because he's just understanding, okay, that's all good. That was just a little stop hunt. Direction is still going. These bodies are still printing. We're still wicking where we got to wick. We're going to go in that direction. So what I'm picking up from what he's saying is us as students getting into markets and getting stopped out, or maybe putting a stop loss where it's not supposed to be, or just having our errors and our ups and downs. It's understanding that that's just intel on, are you right in your direction, in your analysis? Are you able to have we been working on our emotions? Have we been working on not over leveraging to be able to get stomped out, absorb that loss, and then get back into the market and not be frozen with the fear of, oh, not be frozen with revenge trading trying to get back in? It's no, there's no revenge here, and there's no over trading. It's I think and I believe my analysis is strong in this direction. Yes, I got stumped out, but because I didn't over leverage, because I really believe in my analysis and I took time to look at the order flow for what it is, I'm going to get back in. So I think that's what he was kind of asking there. So I just wanted to touch on that.
I love it.
Okay.
Yes, and to reiterate again, whenever you're stopped out, whether you're stopped out in profit or whether you're stopped out at a loss, that transaction is an investment. It's
Mhm.
an investment in intel. It's like you getting a premium portion of information that you never would have gotten otherwise. So it causes you to reevaluate things on the fly right now. If you had to look at the chart right now, is this still a viable trade? That's what I did today. Every time you get stopped out, you have a moment to reevaluate everything. Don't let emotions seep in because of pain and suffering, or fear of missing out on the move, or just regret. Don't give any room for that. Go right into price action, drill right back into it, and say, okay, is there anything in here that's new? If this was just a run on liquidity and I was part of that, would I take a trade based on this right now? Sure. Okay, I'm in. Again, simple. It doesn't feel simple when you first do it, but that's what you're supposed to be doing when you're tape reading too. If you get something read wrong, immediately go in and think, do things still look the same way, or has it completely diminished and go the other direction? And these are exercises you develop. This is anticipatory price reading skills that you can't get from a book. Nobody can sell it to you as a mentorship. Like, you have to earn it by being in the charts. So really good observations. I appreciate you saying all that.
And I'll add one more thing, Michael, because the additional side of that is, if we are wrong, because we're not going to be perfect all the time. The market's always going to do what the market's going to do. The What I've picked up from what you said in the past as well is, if that PDRA that you're using to get in the market, for example, to go long, comes back, price stops you out, hits your stop loss, we sit on our hands, we do nothing. That same PDRA will perform the beautiful function of now being inverted or inversion. It'll trade through that and then come back up and just be the opposite function. So that fear of, oh, I lost my trade, that fear or that revenge or that whatever emotional thing that we're going through, the market's going to go up by using our PDRA that we chose to go up, or the market's going to stop us out using that PD rate that we chose to go up. And if enough time passes, it'll go through that same PD rate, come back up, and use it as resistance to go lower. So there, like, we don't got to jump around and try to, okay, I'm gonna go do this, I'm gonna do that now. No, let the charts and let the candles show you, let the market present to you. We're still holding strong to that direction. Still hold true to that PD rate and go long in it. But if we go through it, then price is heavy. But if we come back up to it and we can't get back above it, then just use it to go low. So it's like a lot of this is just patience, and a lot of this is just watching, as Kid and you always say, just watching these candles breathe, open, go to the high, go to the low, close. What is it doing? Next candle, breathe in, open, high, low, close. And based on what we're visually seeing, because we're all looking at the same candles and charts, it's going to show us we're going higher, we're going higher, we're going higher, we're going higher. Okay, so that same PD rate that I used lower, that I got stomped out on, if the candles are showing me that we're still going higher, I'll just pick up another PD rate a little bit higher if it still permits us range to get to that terminus level. So yeah.
I love that. I mean, we are going higher. Elements of a trade elements of a trade setup. You aren't going to expand and then reverse. It's just that simple. You have to understand simple logic. So standing in front of a freight train thinking that it's smart to go against the trend, it's just not. So it's just not. Anyway, keeping the conversation going. Michael, did you
Check
want to add to
price.
that? Yeah, jump in, bro.
No, I'm just saying, just check price. Just go look at what it's at right
Yeah,
now.
yeah. I mean, 26,907. I could easily see us get up there. It's like there's just nothing as bearish as there are as anything that they're setting. It's just bullishly expanding. So it's where's it going to balance? Where's it going to expand to? So I mean, 26,908 is 26,916 is what I'm kind of looking at for a bullish price as we continue to expand here at 1130. So we'll see what we get here shortly. Gordo's here, got his hand up. Moverse, great combo with Moverse one-on-one. And SHC, we had a seed here, Asaid here. Trades by Fab is King. We'll see if we can get him up. But Gordo, you're up next, buddy.
Hey, thank you, kid. Appreciate it. Good morning, Michael. Thank you for everything you've been doing. I want to ask you a quick question. Hopefully, you can answer it. I'm sure I love the way you've been streaming and walking the puppy on the way up. Right, like it's been so beautiful to see the last couple of weeks, these last 2 weeks, the way what you've been putting out. But I'm a market maker trader, right? I trade sells and buy models. And going back to when a few months back, when you highlighted the area, the price range where we came into at the end of March, um, we were looking like we were in a market maker sell model, right? After leaving the highs that we just came for now on this trend. So what I want to ask is going back to August dealing range on the daily, right? That price action from, let's say, August 1st to the 13th, that swing high on the 13th, would you consider this price that we came in at the end of March an OTE entry of a market maker buy model continuation to the upside?
What market specifically are we referring to?
NQ, I'm sorry, I only trade NQ, Michael.
Okay. Daily chart. And what time frame were you asking specifically about?
For the
The
daily,
end of.
and I'm going back. I have the dealing range that I have, right, is from August 1st to August 13th. I know that in the past you highlighted the dealing range from August 28th to the lows of September 2nd, which is what I call second leg, right? To the move up of a market maker buy model. But the dealing range that I have, which is my first leg of that market make it buy model, came in August. The lows came in August 1st, and my swing high was August 13th, right? And what I want to ask is how would you? Well, it's obvious now, right?
Yeah.
Yeah, it's pretty obvious how we came into this golden pocket. But what would you consider that to be an OTE for continuation to the upside? Because the market was showing that it was going to sell off, right? The market was typically showing everybody his hand. Okay, we could sell off, but we have to respect this price range, this dealing range from August until we don't see that being taken out, we cannot be bearish, you know. And the question is that an OTE entry? Would you consider that an OTE entry? March, the end of March price range coming into that golden pocket.
Sure. From a higher time frame perspective, it is yes.
All right, thank you so much. So what? So I really appreciate it. So everything you're doing, man, Michael, I'm very grateful for what you've done. It has helped me tremendously. Thank you for the opportunity. I appreciate you.
Thank you, brother. Appreciate it.
My boy Gordo in his house. Moverse, you're up next.
Yeah, thank you so much, Kid. And yeah, before I start, I just want to say a huge shout out to Kid who literally spent like so much of his time clearing all my doubts. And I just want to say really appreciate you, Kid, and thank you for that day. And just have some couple of questions for Michael. And is this one of the spaces where I do the protocol where I tell you my entry methods and my way of reading price action, or should I just go into the
You
question?
say your name, you say who you are, where you're from, how long you've been trading, and how you engage with price. Those are the things we like to know with your points within the conversation. So you can be relatively
All right.
quick if you don't mind. Just go over that.
Sure, yeah. I'm Mo. I'm from Edinburgh, Scotland. I'm a computer science student, and I have been trading ICT's price action methods for the last like 4 or 5 years at this point. And I took a big break in between, but now I'm back because I have bills to pay. So that's where I'm back, and I just
You're
have
in your age, Mo.
basically,
Tell them your age.
and I'm 20. I'm
All right,
24
good,
at the
good deal.
moment.
Thank you, sir.
Yeah, so my way of approaching price and how I enter trades is I look for the daily draw, which is usually an old high or old low. And MNQ recently has been easy because we know it's been bullish for a while. So essentially, what I wait for is a manipulation below the midnight open because I know that's going to be a price that's considered discount if it goes below that. And once it price shows me an indication that it's moving in the side that I want with a strong move, I then look for a retracement in form and enter in a fair value gap or an order block and stops below the recent low, obviously, and that should give me at least one is to like a 3 4 RR in most cases, and I'm happy with that for the day. And that's kind of how I wrap up most days in my trading. That's kind of my approach towards it as well. And yeah, can I go for the
Yeah,
question
pretty
now?
please. Good job, Mo.
Yeah, thank you, man. So essentially, Michael, I was there when you called the price yesterday up to 562 and 3/4, and that was like right on the tick that we saw. But I was in the trade. I was in buys long before. Like I was from the morning. I have been bullish yesterday, and what I wanted to know was why price didn't break above 562 and 3/4 and just reverse from there during lunch. Because I thought the liquidity is right. They would have swept up into 562, at least gone up for 1 or 2 ticks above the high, and then reversed. But then it just stopped right at the exact same level, created equal highs, and then just reversed. So I wanted to know why
You
that
saw his
happened.
live stream today, right, Mo? He went over that.
Yeah, I did. I did. Oh, really?
Yeah, he did. He showed you on the daily why it went to the
Maybe.
tick.
Right. Okay. Maybe I didn't pay attention properly. Then
It's
that's my
okay.
bad. I
He
was
should. The
clicking.
answer to your question, he preemptively, I'm answering for Michael, and he can add whatever he'd like because he already answered your question, Mo. He went to
Oh,
the
okay.
daily chart and he took a previous day's high and he drew it across and he showed literally how it went to the tick. And
Yeah. I mean, okay. Okay. That's good. Okay. So yeah, that kind
anything
of
that
my main
Michael wants
question.
to
I got
add,
it.
feel free. I just wanted to, I appreciate you, Mo, but it's a redundant question. That's okay.
Sorry. Yeah.
No apologies. It happens, bro. No big deal.
Yeah.
So,
I have one more question. Can I do
yes,
that
I'd
as
rather
well?
you just jump onto something else maybe that we can get answered here.
Right. So, in terms of retracement entries, and I know Michael keeps saying this, where he says if three PD arrays are violated, your ass is on the line, so you're going to get stopped at. But when you're looking for a like retracement kind of entry, obviously when price retraces from a bullish move and it's retracing, and then you're trying to enter an OT or something like that, price is obviously gonna violate three PD arrays when it comes to your entry. So how do you know if your entry is still valid? Because a price would have obviously violated three BDS on the way down on a retracement while the main move is still bullish. That's kind of what I wanted to ask.
Well, that's not a true statement. That it's obviously going to violate three on the way down. Because there's instances when I'm looking for the price to be supported. For instance, the 920 fair value gap this morning that I was calling out on X.
Right.
I told you I wasn't going to see that as an inversion fair value gap. Well, as soon as we get above that, the low of that is one PD array. If you were looking at price action beyond that low, or in other words, if you're looking at the low that, let me make sure I'm pulling this up here. MNQ, 1 minute sharp. All right. So when we utilize it as an inversion fair value gap at 10:35 a.m.
Yep.
10:35 a.m. As soon as price starts to rally off of that, you could have used that as an entry. Okay, that could have been a facilitation for you to get into the trade. The low of that fair value gap, then you had the fair value gap that's formed right at the 10:30 a.m. And then you have the wick, consequent encroachment of that 1020 long wick that was the stop rate. There's your three PD arrays. That's the defense mechanism behind that type of thing if you're using the inversion fair value gap. So to say that it's obviously going to do that if it's going to still be bullish, that would not be true in that situation because you're looking at market structure. You're looking at how the market maker buy model should pan out. You're part of a second stage reaccumulation there, even though there was a rate event. And then you want to see it rally up and take out that high that was formed between 9 o'clock and 9:15 a.m. So it's a matter of blending several things, not just framing the idea or premise on just one or two things. The method's got to be strong. The model's got to be strong. And then the PD arrays that you're selecting that would support the framework for your trade, you're not looking for the closest things to agree. You're spreading across the range and say, okay, I'm willing to absorb this much of a movement because if it does go down a little bit, it can take out two of those and I'd still be bullish because we had the inversion fair value gap that was called out to you guys on what is it, 946 candle. So that's also a defensive mechanism. So it's a matter of knowing what you're looking for, the experience, and how your model's going to be implemented.
All right, Michael. That makes sense. Thank you so much. And I just wanted to say I really appreciate all the work you've been putting in trying to educate us. And I've been enjoying getting to see your live streams every day. They've been absolutely helpful, and I'm really happy that you're still continuing. Because I remember back in 2023, you said you weren't going to quit, and I was really sad about that. And then I'm still happy you're going strong. And yeah, man, hoping to see a lot more from you.
I'm having a lot of fun doing it, and I appreciate your feedback.
Man, thank you so much. Have a good day, everyone.
Have a good one, Mo. Nice having you on, buddy.
Yeah, thanks, kid. Thank you so much for letting me speak. And yeah, I'll be quiet now, I guess.
No, you've done a great job. Young man from India studying computer science in Scotland, really trying to study computer science and really enjoys being an ICT based trader, really applying the logic and the concepts of what he's learned with ICT and the free mentorship to his computer science program. So it's kind of fun.
Thank you,
It's
kid.
cool.
Thank you.
It's a cool conversation. Well, I like adding context, right? So
Yeah, of course.
having an opportunity to have spoken with you, Mo, I like that folks get to kind of know or understand who you are. So that's important for
All right,
me.
man. Really appreciate it, kid. Thank you so much, man.
Yeah, bro. Yeah. We got SHC here. We heard from my boy Mauricio. We got Hunt Trades here and the specimen. Great job, gents. Appreciate you. MB, Young Trader, SHC. Y'all have been here before. I'm bringing you back on. I want to bring in some new folks, if possible. Alex Yusuf, new guy to the room here. And Jump on in here, Alex. Well, hold on, Alex. You're gonna sit tight. We got MB and SHC. SHC, you're first, then MB, then Alex.
Yo, hello.
How's it going,
Yo,
buddy?
what's up? I'm SHC. I'm 20 years old and I'm from Spain. I've been trading for 1 year and 6 months, more or less. And I've only traded ICT. I've never like touched anything retail like that.
Oh, the true purist.
Yeah.
I love
I
it.
mean, to this day, I don't know what like Wyckoff is. I have no clue what Wyckoff is.
Right. You're pure. Again, the purist within the community. We have young traders that they're like, yeah, I don't even know what you're talking about. I've only ever studied ICT. So it's fun when we come across gents like you, Alex. So it'll be fun to hear whatever your comments or thoughts are. So
I'm not
go ahead,
Alex,
buddy.
bro.
It's your name says Alex Yusuf. Am I
Nah,
saying it
I'm
wrong?
not. I mean, I think your ex is bugged because I'm a SHC,
Nah,
bro.
that's me,
Okay,
bro.
I'm my bad. Okay, my bad. My bad. I'm sorry. It's I'm sorry. Yeah, my ex is a little funky. SHC, I
No
apologize.
problem, bro. I mean,
Ah,
yeah, I mean, whenever Michael talks about um these retail concepts, these indicators, all this nonsense, I don't really know what. I mean, I don't need to know, but I don't need. Well, I'm just getting off track. I'm basically a purist, as you say, and my model is based on narrative. I don't like have like a I don't wait for like a for value gap or have like a schematic of things that I'm looking at. I basically trade what makes sense to me. Like where should price go? Why should it do it? And when? And then I seek the signatures in price, which
How long have you traded ICT?
1 year and 6 months more or less.
Okay, so you're applying more of a universal trader kind of concept, but still maybe lacking the experience,
Yeah, I
right?
mean,
Okay,
uh,
fair
yeah,
enough.
yeah,
Fair
basically,
enough.
yeah. So that's
Okay,
my
go
model.
ahead. Did you have a question, brother? My
Uh,
bad.
well, yeah, I have a couple of questions. The first one is when Michael you joined the space, you were talking about something about ninjas. Were you like a ninja back then, or you were talking about trading?
Back
You
then,
were
yeah.
training for it.
When I was younger, I started taking martial arts when I was 7, and when I turned 13, I started training in Tokakareru Ninjutsu. And then there was a split between Shota Tanamura and um, Masuke Hatsumi. They're two foremost. They're considered like the masters of both brands. Genbukan was a deviant branch off of um, Tokakureiru. So they're both ninjutsu. They're what ninjas trained in. So yes, I'm formally trained in that stuff. I took all that stuff. I learned all the art of invisibility, fire tactics, concealment, um, all the things that you see in the movie. I was an '80s kid. I was fascinated by that. I grew an attachment to Stephen K. Hayes, Robert Bussey. These were the two biggest names in Americanized ninjutsu, but they came right out of Hatsumi, which was that was like my whole entire adolescence and going into my mid teens. So I have several several degrees in many martial arts, but my affection for the ninja because of movies and such, I was caught up in all that stuff. It was wonderful. So when I said shinobi earlier, some of you may know that because of anime and whatnot, but shinobi just is it's it's Japanese for shadow warrior or what we know as ninja.
Okay, that's crazy. That's interesting. Well, my trading questions. Well, my first one is, do you think that going on live during market open, like you going on live during market open, is making the market open more difficult for us?
That's part of why I was wanting to do the Wednesday, Thursday, and Friday. Because if today wasn't the illustration that nails it down, a lot of you want me to do signals. Okay. And I understand why you want it. But as soon as I make a stop known, and I have a huge following, an enormous following. So as soon as I put my stop out in public eye, that's going to create, if you're using those heat map bubbles, okay, it's going to swell up right there. And I gave it to it today. Today, that run down and to take that out, that was not a misplaced stop loss. That was not the algorithm seeking stop losses. That was fill. That was manual intervention. If you've been watching what I've been doing this year, I'm calling out the exact moment when Phil, the operator, not the algorithm, the man, the person, Phil's not his name. I'm just using that as a way of communicating to you. That's manual intervention. Today illustrated that. If I made a business of going out there and trying to give you trade setups, entries, targets, stops, all that business, it would be cannibalized because they would have a vested interest in knocking that off. They'll kill two birds with one stone. They'll knock you out of the trade, but they'll also take away my testimony that I'm bringing forward. They would want nothing more than for all of you to believe that none of this stuff holds water and that it doesn't work. And I'm sticking it up their ass and I'm twisting it, barbed wired. Okay, so I don't want to do it because I know the outcome's going to become that. That's why I do what I do. I teach tape reading. I tell you what to look for. And that way, all of you can participate in it if you so choose. But that's on your own. And you're all going to have different places of maneuvering your stop loss. And because it's evenly distributed over the price run, it's not presenting a big bullseye for them to just turn a little switch and it slides down 50 handles, 47 handles, and then all of a sudden snatches it, and then it goes the other direction. So yes, that I believe that me participating, and I have a lot of students, I actually have charter members that paid me. They're like, do you see what they're doing? I see what I see it. The point is does the public see it? And today was a masterclass in that. I wanted you all to taste it. I gave you the taste right off the spoon. Here's where my stop is. Boom. And to make sure that maybe you wanted to go a little bit more below that because you want to feel protected. They went below that even more. That's a manual intervention. That's them going in there, opening up the market to snatch that range, and then immediately go the other direction. And that's what you watched happen today. So yes, that's why I will never do a signal service. If I had only like 100 people and it wasn't so like well known as to who I am, it would be easy for me to have a signal service like that because the sample set of participation wouldn't be all that great. But because now who I am, whatever I say about the marketplace, people want to parrot what I say, they want to copy what I say, they want to reteach what I've taught. It creates a wider degree of participation. So if I'm going to say my financial outcome to this decision is anchored to this price point not being hit, if you're Phil, what are you going to do? I'm going to run to that stop. And I'm going to go through it a little bit more because I know there's a lot of people that are following that guy. And I'm the guy that's leading the trailblazing right now. So if they could smash me publicly, that would cause a lot of you to say, see, we all knew he was a fraud. He can't trade, and none of this stuff works. There is no algorithm. But here's today, another taste of it. I'm sipping my tea, watching all you guys out here trying to wrestle with what you just witnessed. And I just replied to a dude on the thing saying I didn't call it. Motherfuckers, you can't get any more plainer than what I did today. They couldn't let me get on YouTube to do it live, so I went right over to X and still called it out. I told you what PD raised and everything. I'm not bragging. It's fucking facts. It's not fucking bragging. So no, I can't do signals for you guys. I'm too big. If you see students that learn from me and they don't have a large enough community, but they're trading effectively and using what I taught well, that's somebody, if you want to follow someone to get your feet wet, not to learn to copycat for the rest of your life, but for signal service purposes, that's the best way of doing it. But for me coming out here and doing it, I'm too big for them not to go after. It's easy to harpoon me. They can drop something down 100 handles because they know the impact would be huge. Not so much that stop out and it was a losing trade, but the ramifications of being able to spread it large and far and wide that see, he can't trade. C, the stuff doesn't work. And then they will ignore the fact that after that stop hunt, it goes the direction I would be calling for. And that's the myopic, attention span of a gnat that social media people have. So yes, I do believe our community, which is 2 million plus, I believe that I am influencing it. YouTube's already hiding the numbers of people that are watching my stream. 2 Saturdays ago, or thereabouts, I went on at 9 o'clock in the morning. I had 50,000 fucking people watching that stream on a Saturday morning. It stayed on the screen 50,000 for about 8 minutes, and then they took it away and showed it was only like 2,000 people watching. My statistics on the channel shows no record of 50,000 people watching. Now, tell me how that makes sense. Think about it. What are they doing? They're keeping you from seeing this, and they would love to fucking smear me publicly. That's why I told you, when you listen to these jokers online talking shit, come here, hang out with me, and you watch what I do. You tell me what you saw today was bullshit or not. There's no other way about it. So if I'm the biggest dude in the industry right now, leading more people to do these types of things, which is in agreement with what they do, not those guys on Wall Street, okay, that are selling some horse shit. I'm talking about the real market makers, the real people behind the scenes. They don't want you to fucking know this. They don't want you to learn this. Because once you understand it, you have a limitless supply of opportunity forever. So is that an answer that was satisfying to you on that question or not?
Yeah, thank you. The reason I asked was you made your stop public today, and like as soon as you made it public, you can see the 1020 handle was super aggressive to the downside, and yes, it answered my question. I've got another question. It's a bit technical. Can I ask?
Do you have a picture by chance, buddy, that you can include in the a drawing you can include in the chat, pretty please?
About
Let's see what he has first.
Yeah,
He may
yeah,
have
okay.
inquired.
Yeah, cool.
Well, basically, what I've been studying recently, I've been trying to use the daily wick handle uh, before it gets formed. So what I basically do is use the opening for the daily wick. Say I'm expecting an up close day on the daily chart. Well, I use the opening price for the daily candle, and if I know what the daily low is supposed to be, then I place my fib from the opening of the daily candle to the low of what I'm predicting the daily low to be. And I've been trying to use those levels, those gradient levels, before the daily wick like uh, materializes, if you get what I'm saying. Is that something I should pursue?
Absolutely not. And I'm not trying to hide something from you, but what you're doing is you're trying to measure something that isn't actually there
Yeah,
yet.
that's
So your forecast, that's a lot of like what Elliott Wave is. Elliott Wave does a lot of that shit. They do all kinds of Fibonacci, agreements and whatnot and ratios to try to agree to a specific level, and then they can project another level off that. No, absolutely not. Don't do that because it's so subjective. It's conjecture. And try doing that consistently for a month and get back to me with the results because it's going to be hard pressed to find consistency doing that. I can tell you this, doing what you're describing, I can't do that, but I have tools that help me do things close to what you're trying to do, but I'm not doing it what you're doing.
yeah. The reason I asked was because I wasn't finding a lot of consistency doing it. So
Yeah, here's your answer.
yeah.
Here's your answer.
Okay. The market teaches me.
Exactly right. And that's what I want all of you to understand. When I suggest certain things for you to go in and study, don't don't dismiss it as well. I'll see what everybody else says about it, or I'll ask him a question. Do you think I should do? You go into it. It won't take you long to get your feedback because if it's strong, if it's stuff that works, you'll get immediate feedback confirming it. But if you don't see a lot of things proving that what you're doing an investigation in or researching, if you're not seeing lots of evidence to continue doing it, just drop it and go do something else. That's the easiest way for you not to waste too much time.
Yeah, thank you for that. I mean, It's helpful.
Thank you for reiterating that. That's like almost word for word what I said
Yeah, I
earlier.
was
That's
gonna
that's
say,
cool to hear that.
I was gonna say that the curiosity on the charts really like teaches you a lot. Like learning by yourself is really like what Michael did, right? Like the market.
Well, may I add quickly, when you are able to add process and procedure to this exploration, I believe you can find fruit. But you need to follow very specific criterion. That criterion is outlined and taught within a lot of different places within Michael's YouTube. We in within the community, the base understanding is core content. And I want folks to understand we're dealing with fractal elements within trading. 8 is a fractal. The month 8 is a fractal. You need, and I've got so many people, and it was lightweight frustrating for me, but I had so many people questioning where and how month 8 is only applicable to FX when you're trading a CME asset. And thank you, Michael, for mentioning that today. Where and how we are utilizing the applicability of algorithmic price delivery over a multitude of assets, which the CME is now also including crypto, or that is coming within a few months. But we are dealing with treasuries, we're dealing with bonds, we're dealing with commodities, we're dealing with indices.
I
We're
mean, this
dealing
stuff even works on stocks. If you look at stock charts, it works the same exact way. It's almost easier with the RTH
we
gap.
are applying algorithmic price delivery in the form of specifications, in the form of process, in the form of uniformity, in which we as a community can be looking at applying our view, right? In what and how we see the market. That's really the best thing that we have to arm ourselves against the market, because the market is going to be almost, I mean, it's all knowing. It is an AI. It is, they know what Michael's doing. Those stops are, if he mentions it, it's going to know, because it's a market and it's a $5 trillion a day algorithm, and it knows all the whispers everywhere. And I believe that that's part of being what we've coined here as market consciousness, our own human consciousness or collective consciousness. There is a counter this market consciousness, and then we are doing our best to understand where and how we can be ninjas. I love that you were describing that today, Michael. I had no clue that you'd studied such in-depth practice towards these martial arts. I can totally tell within the delivery of your content, or how you've crafted a lot of your content. I could see not only where and how the skill, learning that as a young man, has probably, I would presume, really translated into your trading, that discipline, that self-control, but then also like a silent power within, right? And I believe trading and being, I would presume, being a ninja, there's a lot of power in just knowing. Like, you don't have to show anything if you're a ninja. That's part of being a ninja, is you can dissolve so many problems and you can do so much undetected. I don't know the art of it so much, Michael, and I don't want to speak out of hand, but I really enjoy the parallels that are drawn within that martial art and the practice of being a trader.
Discipline and focus.
Kid, can I add something quick? My Michael always says, like, know what you're looking for. And that sentence, like, every student needs to write that down on their wall somewhere close to them. Do you know what you are looking for? Not the market you're trading per se, not the price per se at the moment, not the time right now, but do you know what you're looking for? Because when you know what you're looking for, then you could go in the chart and apply the time, the price, the PD raise, and everything else. But that language, those PD raise, the functions, and everything first, and understanding, do you know what you are looking for? And it may not, it doesn't, that sentence doesn't sound like fancy because it's not like an entry model, it's not nothing, but that is the full understanding in the head. Do we know what we're looking for? and how to use it when it presents itself. Because I think Hunt Trades or someone just said a while ago about, oh, this works in Forex and doesn't work over there. And this is, if Michael was to do like a whole experiment right now and just put a chart in the chat, there's no commodity up top. We don't know if it's Nasdaq. We don't know if it's gold. We don't know what it is. It's just candles, and it's just like a bookmark from the start of the day to the end of the day. Today is a. This is why I kind of said it earlier, Kit. Today's price action is a very important screenshot for all of us students. In today's bookmark from the open of the market to where this market will close later on this evening, or even right now, it's a beautiful schematic. It's a beautiful order flow of, do you know what you're looking for within this picture right here? And then apply the opening prices, then apply all these concepts that he taught. But if we don't know what we're looking for, then it's like we're lost in the chaos of candles printing. But knowing what you're looking for, you could put any one of us will be able to pull up the chart later on and be like, oh, okay, I see what's going on. This range is consolidating, this range is consolidating, this is open priced. Okay, price went below it and now we're above it. No talk on the commodity yet. It's just, do we know what we're looking for? Like that sentence, I don't know. I feel like sometimes we come to the conversation and we're looking for these details, and we get the details because he gives it to us all the time. But when we have the details, it's like we leave and it's some people I think arrive back and still don't know what they're looking for. Still not understanding why that 920 candle was important. Still not understanding why that 946 candle was important. Still not understanding where the sell stops were swept, how the displacement happened, how it came back, how it's the 2022 model, how it presents itself, how it's a long range or large range day, how the opening range is not going to get traded back to 50%, how it's going to continue to push higher. Understanding what are we looking for, how PD arrays work in confluence with each other. 946, yes, inversion candle, but look right to the right of it. Another fair value gap, buy side, push up, it dips into that too. What are you looking for? What are we all looking for? What are we supposed to see? And understanding the framework of it's this bookmark of today is such a beautiful thing. It's such a beautiful thing when we all know what we're looking for and where the price it gets extended out in the future, how the PD arrays lay, where it accumulated, where it absorbed orders, and where it's now delivering price later on. But it's like, I don't know. It's like, I guess I'm a student in a certain way. So I've listened to him talk. So what he talks, I see it present in the chart. I didn't go to the chart and get lost in the chaos and then went back to him and, okay, what is he talking about here and what does it look? No, I'm envisioning everything he's talking about with my eyes closed. He wants to see Asian range consolidate. He wants to see possible London range consolidate. Then he wants to see a fake move up or down. Today, down. Then he wants to see an expansion in this New York session. Then we go to the chart and open our eyes to look for what we're supposed to look for and how it's performing. So I don't know. There's as we said before, there's a lot of homework that we got to do. And a lot of it's in the charts, but a lot of it's just putting the puzzles together within our mind and the notes and the journaling we've been doing and listening to the conversations. But it's everything he said, it's right in the chart. No matter how you want to trade it, every PDRA he's talking about is in today's price action, yesterday's price action. It will be next week. But what are we using? Do we know what we're looking for? And how do we perform the functions of those items that he says and the items that we choose? But knowing what you're looking for is important. At the turtle soup, do we know what we're looking for? Inversion, or we're looking for the leg in the direction? Knowing what we're looking for, internal range liquidity. Why is it retracing back? Someone said, oh, but it's going to disrespect three PD arrays, but it's going to do that naturally. No, it's not. If you enter somewhere, you're now looking for confluence and confirmation of it going into the direction when you entered. If it's disrespecting stuff, it's coming back for you. But if you're lower in the entry, yes, when it meets midway, there's going to be some retracement, but you're not worried about that because you're so deep in the entry. Kid talked about this morning. It's reaching towards a certain number. He entered in internal range liquidity at that 10-20 candle, and he was aiming externally, knowing what we're looking for. Michael said it's all the time. Are you going to be an internal range liquidity buyer, seller? And are you going to distribute your orders externally? Or are you going to wait until it goes externally to absorb sell stops or buy stops and then deliver and distribute internally? Knowing what we're looking for, it's so important. So the student who's listening, and I'm listening to myself speak because I'm helping to articulate myself and give myself calmness to understand it's all the same things, internal, external. Liquidity, direction, bias is all the same
I
stuff,
love
buddy.
that. I love
All
that.
right,
No,
yeah.
I love that narrative and that logic. And you're absolutely right. I think being able to talk to yourself in that regard, it was very enlightening when Michael asked a student a question here in Trader Roundup, where he asked the student very specifically, are you taking trades from an inefficiency or from the extreme of a range? Right? Like, where are you looking for? Are you like an exhaustion kind of style? Or are you in the middle? Are you in the IRL kind of style trade or an ERL kind of style trader? So, really, really good points specimen. Thank you
I
very
think
much.
I think something that happens after hearing Michael read Price live for so long too is you almost start to hear that voice in your head. And it's like you're hearing what he would say as he was reading the Price live with you because you're reading it in the same way because he's taught us so well. And I think when you really listen, like there's the lectures, there's the rants, there's all the little bits and pieces of information, but sometimes he'll go into this zone where he's just reading it live, candle for candle, candle for candle. And when you hear that done enough, you start to get that voice in your head and you're reading it candle by candle like that too. And it's like really like people use the term the breath of a candle, like you're literally watching it breathe, watching it form, watching it play out. You know what the higher time frame candle's playing out as just from watching the lower time frames or vice versa. Like you get really in this zone that he's, you know, passed on to us. It's hard to get into that zone in anything at a high level, and he's kind of helped us tap into that flow state by doing it live with us, and it's really cool.
I love it. I love it. Keep it going. Keep it flowing. Chris, you want to jump in here, buddy? We got MB as well.
Hey guys, I'm Chris. I'm a landscape contractor. I'm 47. I've been trading. Well, I started trading when I was in high school. One of my math teachers got me into trading pork bellies, and I wanted to be a stockbroker when I was growing up. And life happens, and I think it was about 2008 when we went into the recession. Things slowed down, and I started trading and lost a bunch of money and kind of lost interest in it. And when COVID happened, I started getting back into it, and I learned how to trade around dark pools and the retail logic. The dark pools are like a legit thing, but the problem is the gal that taught us, she'd just say bullish above, bearish below. Well, how do we know where it's going? I don't know. It's just bearish above, bullish below. So I started doing some research and I found Michael, and it immediately resonated with me because I was seeing things in the chart that I couldn't explain. And when Michael started going over it, I'm like, I know that I recognize that, and then it was answering a lot of questions I had that nobody could answer. So the question I have, Michael, is there's two questions: dealing range and time. One of your uh, videos that you did, you used a Fibonacci, and you had your 100, 200, 3, 4, 5, 550, blah, 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 up to 750, 1150, 15, and then 15. And what I've found is when I measure the bottom of the dealing range and I measure that wick, it's a pretty good projection on where that dealing range is going to go. 7.5 deviations is probably a pretty good projection up to 1150. Um, can you explain if you how you use that?
I have no idea how to answer that because I don't know what you're talking about in terms of anchoring a fib and what am I measuring? Are you talking about like when I was forecasting a unrealized dealing range and I'm putting levels in the future that would usually become a stepping stone for like a PDRA to form or a reason to buy or trail a stop or add to a position? Because I'm not certain where you're going with your question to answer it. That's what I thought.
Maybe and maybe I stumbled across it by accident, but you were measuring gaps, and so was studying the charts, and I was just messing with things, and so if you make a swing low or a swing high, whether it's intraday or on the daily chart, what I do is I measure the swing low or high of the wick, and I project that. And on a daily, like a 5 minute or 15 minute chart, it's usually spot on. You can almost project where the bottom or the bottom or the high of the dealing range is going to be.
Maybe send a chart in the purple pill. That way we all can see it and I can understand really what you're saying. Because unless Kit, you know what he's talking about. But I apologize. I just can't. I can't
I
really.
think he's taking a fib from a wick. He's trying to grade the wick, but he's projecting the wick versus grading it. So he's taking the low of the wick to the close or the open of the body, and he is doing what you did, I think, in February 11th, Saturday institutional projections,
Okay, hold
where
on. I'm doing it right now. Give me a
okay.
second
Yeah, yeah,
here.
yeah. The way you utilize the intermediate term highs and lows and the wicks and where you and how you've projected those 4.5 standards in previous lectures is what I believe he is referencing to some iteration or point in the way of a projection and how he is utilizing a wick or measuring a wick to an unrealized range.
Okay, you should be seeing it.
All right, let's see if I was somewhat correct in my assumption. Purple pill. I'm not seeing it. Hold on.
I put it in the chat.
My hold on. I still haven't seen it, but it's going not to where I want to see it. Can you see it, Michael, at all by chance?
I'm scrolling through it. Hang on. Let me look at the most recent post.
Yeah, no, that's okay. I can't see it either. Chris,
Okay.
maybe you can
Yeah, I
post
can
it
see some.
again. Okay,
Okay.
good. Maybe Michael.
So what are you drawing that fib on? Like what is it anchored to?
The wick. Let's see. Let me go to the chart and I'll give you the. So I have it on NQ 5 minute on 820 on the 5 minute chart.
NQ 5 minute. What time?
820 on the 5 minute chart.
8:20. So the low of 820's candle on a 5 minute basis, NQ.
Yes. And then
And
the
what do
low
you?
to the high of the wick. Or the low to the open.
Okay.
Where's the purple pill at? Oh yeah, I see it. I put it
Yeah,
in there.
I was trying to figure out what you were all talking about. Then when I was like, "What the hell are you talking about?" Well, there was a purple pill. But yeah, I was embarrassed to ask for them. I was like, is that something like medication? Like I don't want to offend anybody. Like, what the hell are you talking about, man?
Yeah, the
Um,
little like oblong thing on the right. That's
yeah,
That's
hilarious.
the new Viagra, Michael. That's
yeah.
the new age.
No need.
Okay, all right. So, and what uh what is your
Let me
question in regards to
let me go to your do you care if I put it in? It's not something I really wanted to post, but I like it's like maybe it's my little secret weapon, but we're all the family here. So can I go to your X account and just post it in one of the
Well, I mean,
my
everybody was going to see it there too. I mean, in fact, more people will see it there than they would here. If you're uncomfortable sharing it, then spend some more
Yeah, don't
time.
share it. Yeah, that's fine.
Yeah, to spend more
uh,
time with it. And if you've really worked out some kind of a rule based idea that how you're applying it, even if it's hindsight, you know, it might be something that I can either encourage you to continue, or maybe I might learn something.
well basically what happened today is I wish you could see this picture because it played out like to the T. Like it's crazy. I'm shaken even thinking about it because it's kind of like the hidden little gem I found.
Well, I have shown examples in the past where I have taken a order block and I've done imbalances like fair value gaps and measured them. And you can project intermediate term and long term highs with them, but it requires a whole lot of understanding with the market structure that just simply, otherwise, you're just going to cherry pick things and find things and stuff. I did a lot of that discovery on my own when I was younger. And when I was looking at trend lines, I used to think that if one of my oldest students was here, Gate Trader, Um, he and Chansum, those two guys, they were in many of the lectures I was giving back then. And I would say, okay, this is hidden. These are hidden trend lines. And I was under the assumption that I was seeing something that had validity to it. And I was trying to teach that to them, and it did not hold up after that. It was so much of a letdown because I thought I discovered something, but when I was putting money behind it, it was not panning out at all. And it was not a whole lot of people that were in that group that I was teaching it. But if you're not careful, things like this can lead you down rabbit trails that really take you nowhere. They're fun, they're very fascinating. So just be careful. Unless you're getting a structured approach to implementing the idea that you're consistently using the same methodology of why you're even considering it, it just might be some kind of aberration. And just it's a neat little thing there, but can we do anything with it to make money? Not to
Kit,
discourage you.
Kit, you posted in the deal comment section. I put that chart in there where you posted that.
Pardon?
You posted comment section in the comments. I posted the chart where you under your name and in the comment section.
Okay. I'm looking. I'm scrolling. There's a couple comments here. So, comment section. There it is. What's up, purple pill? There it is. And you projected that wick there, and it gave you I mean, that seems like a nice, unique projection. I mean, that looks like it's something good for you, mate. I mean, I see where you're at. I mean, it's a projection. And that's what we do within this community. There are a multitude of ways in which you can utilize a multitude of measurements in where and how you want to project price. It could be a standard deviation. It could be Fibonacci. It could be quarters. It could be eighths. It could be whatever, right?
So basically, how I use this is I don't use that to make a bias. I look at the internal. I like the turtle soups. The purge and revert. There's lots of things that I look for, but
Yeah, that's awesome, bro. That it looks like you have
I
a
implement
legitimate
this all into it.
you have a framework, my friend, and what you're looking for is a consistent framework within your model. Where and how Michael utilizes, for example, the PD array matrix, where and how the time-based gap logic from market close to market open and the 930 open drive, where and how to trade the RTH gap. That too is a framework. So affixing to something that's consistent, something that you can build a model towards, is wholeheartedly precisely why we are all here. So kudos to you, mate. Looks like you have something that you can work with.
The second question I have is time. So the thing I struggle with is time.
Well, you're
I
in the right place, my friend. That happens to
I
be my favorite thing to talk about.
I never have
I
enough of it
just
either.
I just struggle with the time cycles. Do you have any suggestions? I went
Yeah, I
over it
don't
and went
know,
over it
Michael.
and
I
went
was
over it.
wondering, do you have any time-based concepts? I'm just fucking with you, Chris. But
I know.
I'm just playing a little bit. But I'm saying facetiously, yes, yes. Utilize the kill zones. Do exactly what you're doing, and delve into. I would say one setup for life would work really well for you, mate. With what I'm looking at on your screen, go to that episode and start playing with your fib mechanics, the way you're utilizing them within Michael's very specific episode called One Setup for Life with session
Okay.
liquidity. Okay.
What about the time? Would
Session
Michael?
liquidity will address the session time specifications in which you would then be keying off of or looking for these higher highs, lower lows, wicks, fair value gaps, whatever it is, in which you've already got a very clear logic that works. So it's a
I'm
really
thinking I'm
good.
talking more of like a 1 month, 3 month, like them time cycles rather than the internal,
It
like
sounds
the
like you're
kill
talking about
zones.
the 20-day look back, 40-day look back, 60-day look back.
Yes. Sorry, I didn't clarify
Month
that.
six.
Uh,
Month six core content.
month
Yes,
6.
sir.
Okay,
Swing
thank
trading.
you.
Beautiful.
Appreciate you guys' time, and thanks, Michael. You're a stud.
My wife is just looking at me hearing that, and she's like, "You better watch yourself."
That's funny.
I didn't tell him to say that, babe.
Oh,
Hey,
that's hilarious.
your ego's big enough, but I'll help boost it anytime.
Well, another man calling another man a stud in earshot of his wife, then she's going to be the one saying, "Excuse me."
Hey, you guys have a good day. I'm gonna let somebody else jump on.
Have a great one,
Enjoy your
Chris.
weekend, bro. Thank you.
Alex has got his hand up.
1 p.m. extraction.
Yes, sir.
Hello, Kitty. Hello, ICT. Thank you so much for this
He called me Kitty, mate.
protocol. My name's Alex. I'm from Melbourne. I'm 26 years old. When I first got introduced to ICT through a friend of mine, he goes, "Oh, just watch this guy. He's all you need." And when I first started watching his 2022 mentorship, it was I started to like it was so much information, and I was just like, man, this guy sort of talks too much. And then he said something in the video, and then I watched like 25 minutes of the video, and then I just went back to the charts. And then a week went by, 2 weeks went by, and there's something that he said in the video, which was a shift in market structure, fair value gap, OTE, and I just kept seeing that happen every single day. And I'm thinking, this guy just said something in the video and it's happening. I'm like, let me go back to his video. And then from then on, I just smashed, all of his videos, 21, 22, 23, and it just became like an obsession. And one thing with me is, so I'm a bit shaky right now, I'm a bit nervous. I've just come
You're
out of the
you're doing
hospital.
great, buddy.
No,
You're
you're
doing
doing
great.
fine, man. We're all
I've
men
just
here. There's nobody special.
so I've just come out of the hospital. I've been in and out of hospital for the past 3.5 years. I've been diagnosed with a very chronic illness. I haven't been able to work. I've had about 15 surgeries in the past year and a half. I just had one yesterday, and I've just come home. And it's really a struggle for me to balance. I haven't been able to work and sort of earn any income to put into trading, but I know so much about the charts, and just that imbalance doesn't allow me to sort of thrive. Um, and I had a few questions also with my model. I really, really like. I like to trade all sessions. Like anytime, there are times where it's in high resistance and time distortion. But previous days highs and lows are my favorite draws, and I like to take it to those previous days highs and lows when a session Asian lows being taken or London highs being taken if I'm trading New York. So just framing the accumulation, manipulation, distribution, and whatever time I'm on, I'll be looking to see, okay, on the daily chart, where is it most obvious to draw to? And or where is the imbalance on the daily chart? And usually, you know, it's just having that framework, it's very easy to navigate. And with the concepts that I've learned and utilizing the new week opening gaps and new day opening gaps, it's just like it's a walk in the park. But my only issue is my inability to work because of my medical condition is just I'm constantly, I get frustrated that I can't work, and I focus a lot on the money aspect and not just watching the price and trying to, just perform good. And when I am performing and when I'm not thinking about the money or I'm not stressing about the money and I'm, in a good mood, it's like last month I had my biggest win ever in trading where I made about 45K with Top Step in about 3 weeks. And that was a complete game changer. So I just wanted to ask Michael um, if he had, or if he was in my position, what would he recommend I follow for like the next 30 days?
Well, I would look at what you are most successful with in the time of the day and focus on the one that you're excelling in and trying not to be so overzealous about every time. Just pick one that you've done the best in overall and then bloom there, focus there. Um, I love the idea that you have a simple model of attacking previous days highs and lows because that is something that will never exhaust itself. It will never be able to hide that liquidity from you. They'll never be able to do that. And because now I've taught concepts of like the inversion fair value gap, even if you think a run above the previous day's high is likely to happen, if it does that, it could continue and keep going higher, obviously. But if you're watching that with the expectation of that unfolding, but it fails and breaks down, you can go right into the inversion fair value gap and use that to be short. So focusing on something just as simple as that and apply contrarian methodology when it's applicable, but running for the liquidity above old highs and or below old lows in a very specific time of day. Okay, if it's going to be New York session, you'll do fine. If you're doing London, you'll do fine. If you step away from those two, the the probabilities can shift considerably. They're the two largest. The most trading comes through those two times of the day. So if you focus on just those two, or preferably just one of those two, and look at your results, which one did you see the actual profit from? And try to fight the urge to do more than that. Because in trading, you're mastering the periods between trades, and the majority of your time is spent there. And if you try to fill in that space of time with more trading, the only thing you end up doing is create drawdown, create scar tissue, overtrade, and then it builds these toxic ideas that you should be participating more. And then when you go into drawdown, you have to participate more because you got to correct that issue. That's what goes on in your mind. So I would suggest that you do those things and see where that leads you.
Thank you very much. That was very helpful. Helpful. The most recent teachings regarding the 930 first percentage fair value gap and the quadrants and the octants, that is just a absolute game changer. Even when I am trading the New York session, the last 3 days regular trading hours quadrants, they're actually getting used to the tick, and it's just amazing to see how, you know, you've been able to discover this and how it really works in the something that you've learned, and I can see, and I'm sure everybody else can see. And I'm really confident it's only a matter of time before really all of us, really start to bloom, because it is very challenging at the moment. The past month, I think it's been very challenging for me. Maybe some other people can relate, just because of what's happening in office and stuff. But still, no excuse. Price is still moving algorithmically. There is more manual intervention, time distortion, and more high resisted liquidity runs than usual. Um, but what's one of your best advice for someone who can make money but keeps giving it back due to overtrading?
Don't make another trade after you profit for the day. Turn your computers off, do something else. Don't trade on Fridays if you're profitable.
Can I add something real quick, Alex, just to your point?
Sure thing, brother.
Um, if I'm trying to put myself kind of in your shoes, and I think when you have a lot of challenges off of the chart, I'm sure you're finding a lot of peace and solace on the chart. Is that fair to say?
Absolutely. I do try and take out my um, situation outside of trading, and I try and feel better, or try and get a win, or try and get a payout, just to sort of fade away what's
Well, what
negative.
I what I would like you to do is, I mean, like, there's a real, and this is talked a lot about by Michael, but I would really like to see you try and focus on, within the charts, a meditative practice. Like, you need to try and find calmness and peace within the charts, within where you're at, because you're dealing with a lot. And we want to be able to disassociate with the performance while still finding a meditative peace. And I believe, within just the conversation that you're having with us and some of the challenges that you're facing within your own personal life, that finding solace and or peace on the charts are good. You can do that. You could forward test a lot of models. You can acquire a lot of data, but that doesn't mean you need to overtrade. And what you need to discern is where and how you're in a laboratory versus where and how you're actually running your business. Because I believe, with what you're telling us, that you're going to continue to be able to pour yourself into and over the charts with what you're learning, with what you're applying, with what you're successfully able to see. But what you need to also be mindful of is, as you're winning and as you took the largest payout you've ever had in history, and as you're winning, that you need to find meditative peace in the charts. Does that make sense, Alex?
Yeah.
I heard
How
what you
does that
said
make
also. I heard what you said when you were before Kit came in and counseling with really good advice. You mentioned that you tend to take an exploration into the charts and try to remedy how you feel. You try to remedy everyday living, and your everyday living is met with a great deal more adversity than the average person. So it's reasonable to assume that that was going on. I didn't want to delve into the personal aspects, but people with chronic illnesses, disabilities, handicaps, it's even worse when they used to be 100% and they've been diminished because of something that was debilitating. They feel like they have to prove themselves worthy of some worth. And doing something well, like analysis, engagement with the market, executing with a model that you stay rigid to, and maintaining or at least aspiring to hold a measure of indifference. That's the goal. And when we look at price action, it is very much like a form of meditation. We are not trying to remedy our life problems, but we are trying to remind ourselves that that problem is not us, and that problem is not permanent. That problem is something that can be managed, but your ability to manage yourself in price action is a challenge, and that's what makes this very difficult. And it's very easy to find fault in everything outside of ourselves when we are going through a great deal of adversity, because we are in the process of consoling ourselves with the incorrect way of doing it. Oh, well, you lost money because those guys taught us something that didn't work. Or I traded this stuff and the broker screwed me. And we always look for this out to justify why we just didn't do it well. Versus I'm going to look for an outcome that I don't care the outcome is favorable or not, because the model says this is something worth doing. And that model's been qualified that it's valid over time, collecting information around the utilization of that model and the essential tenets that go along with using it. What you use to get in, what you use to place your stop loss, when do you move your stop loss, where do you take a partial, when do you say, no, I'm not going to take a trade, even though it might look like it's there, I'm not going to execute again. And also having parameters and protocols that says, I've made money, I'm not allowed to go back in, regardless. And living well as a trader like that, managing yourself like that, that's excellence. That's success. The profitability is a derivative of doing that. But the goal shouldn't be profitability. The goal should be find a model that yields an outcome that's favorable and then bloom there and be indifferent to every individual transaction. And you'll never feel the desire to take your out in the real world things and come to the market like it's a god and say, please heal me of this pain. God of the market, please, I'm worshiping you right now. I'm at the altar of the buy and sell button, and I want all of this to go away. Please, please ease my pain. And that literally is why people fail, because they're treating the market as a god. They're treating the market as a genie in a bottle, as um, a, a fixer, when you're the fixer. The problems are yours. The market doesn't care that you have a disability. The market doesn't care that you have a wife that left you. The market doesn't care that you have an illness that you're ready to be found by going to the doctors, and now you're struck with fear about what the uncertainty is going to be and how this is going to impact your family. It does not care. So you need to have war with this market with the same measure of indifference. You have a weapon, you have a shield. You know what the job of that weapon is. You know what the job of that shield is. You're not demanding the shield do more than what it's supposed to do. And the weapon is not a tool to dig with, it's to do offense with. And you're focusing on a model using both of those procedures of defense and offense and having an indifference to the outcome. You don't care what the outcome is, because more times than not, you may swing, you may use your weapon, and it may not be a death blow that allows you to take home something that is profitable. You may have to swing it again. You may have to parry and use your shield. That means you're taking a little bit of a hit. It means you got stopped out. It means you have a little bit of drawdown. But you're not going in there and saying, well, I missed that first swing. And then I took one with my shield. So let me go in there now and try to attack again. It might mean that you have to sit on the sidelines and not trade for that session again, or that day, or even week. Because what you're thinking as the catalyst that puts you into the trade, if it's a comeback story, if it's a revenge narrative, if it's a hero, main character type of persona that's putting you into the trade, and you got to be honest with yourself when you're doing these things. That's why keeping a journal is important. If you're trying to be the main character in a movie plot that isn't really being filmed, you're opening yourself up for terrible things to happen. Instead of a Rocky story, Okay, it's a fucking Texas Chainsaw Massacre, and your ass is on the hook. So you don't want to be going through these things by your own hand.
Thank you so much for that. I will definitely take that into reconsideration. That was very, very helpful. Just maybe one final question. Just another habit of mine that I have, and I tend to do a lot. As soon as I open up the charts, I'm automatically finding myself, you know, I see a fair value gap, I see equal highs, or I see equal lows, and I'm immediately finding myself entering trades, and most times I will end up blowing the account, and then I instantly reset the account, and I end up hitting the initial target. And if I had just waited maybe that extra minute, or if I didn't just take that extra trade, I'd be in a completely different position. How could, or what could I do, or what could I implement to sort of shift that habit, or shift um, that negative thing, that negative cycle that I keep falling into?
That's called impulsivity, Alex. And how you deal with impulsivity is maturity. So when you're managing impulsive behavior, you have to give yourself a consequence. You're playfully giving yourself a consequence by forcing yourself to pay a reset. And that's the consequence that you are playing within your Fortnite game in lack of accountability or lack of discipline for you not rushing in to just simply take a trade for trade's sake. So being more systematic, that's my thoughts or opinions. And I would say really focus on be more systematic with your approach to the market, Alex. Alex, you're dealing with a lot of shit. And what the market needs to be for you is a meditative practice where you're actually taking control. You're dealing in an algorithmic world of chaos, but you can actually watch the breathing of a candle on a high frequency time frame, aka a sub 1 minute chart, and you can actually see how it's breathing. And within a meditative practice, you can want to see where it's going. And the more you can disassociate with money, the more you can stop playing a game and actually come to the market and utilize the market and your knowledge as a way of getting in sync with your own intuition, as a way of maturely coming to terms with the challenges and difficulty that you face, because the market will provide. And you need to utilize the market and your capabilities of finding peace. And I mean that because your world and all of our world, we live in a fucking shitstorm. And you came to Trader Roundup talking very loudly about your shitstorm. And I respect that. We all kindly are in some form of shitstorm. Your shit sandwich definitely sucks, bro. I feel for you. I feel for the challenges that you have, and there's no way that I can even empathize with how difficult it is, your life. But what
Do
I
you have
can tell,
children? Sorry, do you have children, Alex?
No, I live with my mum and dad.
Okay, if you had a child and this toddler kept doing something that would be endangering it, what would you do to the child? It doesn't know how to have a conversation with you. It's just finally got to the point where it can walk. But you're in the kitchen or another family member's cooking and the oven's hot, the stove's hot. It's it's a dangerous situation for someone that wouldn't know if the surface was touched, it would burn them. So this little toddler of yours, if you see it keep constantly walking into this area where there's danger, what would you do for the toddler?
It's pretty interesting when you put it that way. You'd
But boundaries,
obviously,
not what you
yeah.
boundaries, limitations, parameters, not allowing access. And a model gives that to us as traders. We are allowed and we're given permission to take action if a specific criteria is safe to do so, if it's profitable to do so. It's not profitable for a toddler to walk into a kitchen with hot surfaces all around it. So the responsible party puts boundaries to prevent that from happening. That's rule-based trading. You are a young trader that needs to be protected from yourself. So when I was saying to you earlier, you asked a question that my answers were actually the answer to that too. A well-rounded model with very specific criteria that gives you the permission to participate. And then once you win, you stop. It doesn't mean you can't paper trade. It doesn't mean you can't tape read, but you cannot take another execution to take away what you earned for that day. If you have a losing trade, stop. Don't take another trade. And what that'll teach you is it'll teach you patience. It'll be you mastering the market, not the market mastering you. It's giving you the ability to navigate without having the emotional stimuli that takes everybody into tilt and they end up blowing their account. Every single time you went into tilt, I guarantee you, whatever you thought your model was, you weren't using it then. So the way you keep yourself from blowing up is you have to have a model with very strict rules. And the least amount of times you can execute, the better.
That was. Uh, I can't believe how much I needed to hear that. Thank you very much for that. And thank you for everything that you've done. God bless.
You're welcome, Alex. I'll keep you in prayer, brother. Thank you. Have a good weekend.
Thank you, brother. You too.
You're in our prayers, Alex. MB, you're up next, bro.
Yeah, everyone. I'll do the protocol. I'm MB. I'm 17 from the UK. I've been trading ICT for about 2 years now. I prefer the model 2022 and use inversion fair value gaps as well to target relative equal highs or lows. And yeah, literally what you was just talking about, the one trade for the day. Before I was constantly at least having 5 trades a day, and that would cause me to go down in profit. I'd have the first few trades win, and then I'd have a losing trade, and then because I had that losing trade, I'd want to make it all back. So I'd go and try and make it all back, but all of it would just I'd lose it all. So instead, I listened. I forgot what episode it was, but it was in a space, and he said you've got to take one trade a day. If you win, you win. If you lose, you lose. So you take that, and every day, no matter what you do, your eyes are going to have to pick the best trade that you can see, because you don't want to waste your one trade of the day. You want to keep that one trade and find a good setup for your model. So that it doesn't also restrict you from losing as much money. It also makes you pick out the perfect trades to take. It makes you look for the better ones. But yeah, I also had a few questions for Michael as well after. If that's all right.
Yeah, jump in, buddy.
So this is from quite a while ago. So who in specific does Phil come in and take out? Is it like you, or is it another large group of people?
It's not me, and it's someone that has a vested interest in causing disruption in the market. And that's as far as I'm going to go with that one.
All right, definitely that was a good question. Also, do wicks act the same as gaps if you put like a quadrant level on it? And if say you've got a fair value gap shape, so you've got 3 candles, say bullish in a row, but the wick overlaps the candle, which would have made it a fair value gap. I've sent a few pictures in the chat, so if you don't understand, would that act the same as a fair value gap, like the wicks?
Yes, we treat them the same way.
Oh, okay, perfect.
I think that's an implied fair value gap that even has a term.
Kit, do you know what episode that is?
DM me and I'll send it to you, buddy.
All right, perfect. Thank you. Also, I just want to say every single person that's come on here today has had an amazing combo.
We have,
It's
this has
been
been a
amazing.
really, I have to agree with you. And we are in the last few minutes here. So let's get to a point to where we can sign off. We got Juicy Trades here, good buddy of mine. He will be our last speaker and see if he's got any question. Where'd he go? Darn it. Who do we have here to be last? Well, Michael, we're in the last 5 minutes. I don't know if you have anything in closing you wanted to add with the market, or if we want to take one final question.
If there's somebody that wants to ask a question, I'll close with after him or her,
Okay.
whatever.
Yeah. Well, we already know. Hold on, real quick. I will say, holy PHUC. We know he is raging to come up here, and he wants to do the Budweiser "What's Up." So, real quick, all speakers, what's
What's
up?
up?
What's up?
But
What's up?
It's so great. I love that. I'm excited, and we are going to do that with more energy next time. So the "What's Up" will definitely be a thing. Holy fuck is the inspiration of that, and our generation is of that as well. So final question. MB had one last question. Young man, bring us.
no, that was
Okay,
already my
well then,
question.
okay,
I'm
that's
not
fine.
sure if I
SHC has one final question then. Cool, good deal. My bad.
Yeah, my question is regarding the dealing range and the opening range. I've been studying the dealing range since Michael introduced it.
First
And
hour's
my
dealing
question is,
range.
yeah, the first I was
Okay.
dealing range.
Okay.
And my question is that sometimes the dealing range, like range and the opening range overlap, like the highest high from 9:30 to 10 a.m. is the same highest high from 9:30 to 10:30 a.m. and same with the low. And when that happens, is the opening range or the first hour's dealing range more important in price since they are both overlapping with the range?
The first order of business is the first 30 minutes. That's the opening range. If price doesn't really migrate too far above or below the range that's formed in the first 30 minutes, and then as soon as 10:30 closes, now we have a full hour's range. If the range is essentially the same, even if there's a small little movement above the previous highest high and the lowest low, but it's only like a small little wick that does it, kind of like what I teach as a Mohawk type thing. When that occurs, the main premise is go back to what was presented in the first 30 minutes. If there's a fair value gap in there, it'll use that. If there isn't so much a fair value gap there, and there's no wick that could be treated as a gap as well in the first 30 minutes, then go into 10 o'clock, look for silver bullet. That fair value gap, the first one that forms there, or wick, okay, then that will be a catalyst for where the market's going to be driven off of that higher or lower.
Okay, thank you.
Quite welcome. Enjoy your weekend, buddy.
Bang bang. I mean, we're here. We got time for one more. I'll bring in an oldie but goodie Market Oracle. He's a good buddy, good friend to trade a roundup. If he connects, we'll see if he connects. Market Oracle, where'd you go, buddy? Come on in, Market Oracle. Market Oracle, come on in. Yeah, bro, come in.
Question. Yes, thank you so much, Kate. Thank you so much, Kate. So I have a theory, Michael, one more theory. So we have been going higher highs for the days, and the market was in a hurry to clear all-time highs by Friday. So do you think we are gonna have a real interesting weekend where something might be happening over the Middle East that would cause the market to go into
I
to
mean, what a
go
great question, but
deep down
gap
or
risk is
nose
really
deep?
hard to answer, right? I mean, Michael, your thoughts? Gap risk this week, taking all-time highs. They're going to be pounding their chest. America.
Yeah, I was going to mention that before I closed. This is a scenario where if they've taken highs like they have, and we have a Friday, we could have a scenario where something terrible, literally unbelievable could happen. And I'm not trying to say that there is, because I don't know. But given what we've been seeing thus far, it would be perfect for them to leave the market at all-time highs on close today. Maybe even a little bit higher than it's already been. But then something terrible gets done over the weekend where nobody can do anything about it. And longs are they're trapped. Once the close happens today at 5 o'clock, you have no chance to do anything until whatever we see happen on Sunday at the open. What would happen if they did some kind of tactical nuke? And I'm going to use it as an extreme. I'm not saying it's likely to happen or it's going to happen, but what do you think the market's reaction would be at 6 p.m. on Sunday? It'd be down probably 1,000 handles right from the opening, and people would be decimated by that. So these are the types of things when I talk about black swan events, false flag events, things where the unexpected happens to the average person. They're not looking for these things. They go about their business every day. But as traders, you need to be thinking like this now, not to try to push conspiracy theory on everyone. Not that it matters, because most conspiracy theories are now fucking fact now. So by having this conspiratorial perspective of a price, it kind of makes you not fearful, but you have to at least be sober-minded about the stage at which they have now, where they can close the market at all-time highs, close the market on Friday, and shitstorm come over the weekend, and then decimation on Sunday, and then market bloodbath on a Monday. These are the scenarios that I run through my head all the time. I'm expecting that stuff all the time now. And it doesn't mean I'm paralyzed in fear and I can't take trades. It just means that I'm expecting it. So when it happens, should it happen, I won't go back to where I was when I was 20 and have anxiety attacks and be fearful of trading. It's something I anticipated. It's something I expected to see. So therefore, it's not going to cause me to go like a turtle in its shell and then hide. That's my way of coping with uncertainty on the grandest scale of extreme. And you may not feel like that's worthwhile even considering, because maybe it makes you feel uncomfortable. Think about those things, so you try to stay on a positive bounce. Okay, that's your way of coping. But that's not going to help you when it happens, because you're going to be scared shitless. You're going to be paralyzed in fear. You won't want to trade because you won't know what to do. You'll be asking me on Twitter. Other people will be asked as mentors, what do you think is going to happen? I'm never going to ask anybody when that happens. What do you think happened? I'm never asking, what do you think is going to go on? When's the last time you ever heard me do that with anybody? Because I don't give a shit what anybody else thinks. So when that type of event happens, and we will see something like that happen this year, before we cross over to 2027, I promise you, you're going to see some shit that you ain't never seen before, and it's going to be wild. And it's going to probably be implemented to fuck us in the market. And it's going to be a weekend event. That's when they do it. They do it all the time like that because you can't do shit about it. You just take it up the ass and that's it. You're done. You're victimized. And you can't punish them. What are you going to do to them? Nothing. They're laughing at you. They're taking from you. The greatest wealth transfer is happening right now in front of all of you. And you can't do shit to stop it. So don't worry about it. Expect it. That way you're not surprised and shocked by it. Everybody else is going to lose their fucking mind. Everybody is going to lose their mind when shit like that happens. But you as a trader, you're indifferent to it. It doesn't mean you can't be compassionate for the people that it's affecting, but you chose a industry, a career path, a business venture that unfortunately sometimes we profit when bad things happen. That does not make you an evil person because you didn't cause that shit to happen. Everything that's going on there between Israel and Iran and how they're fucking up Lebanon because they want that property too, they're wrong by doing that. They're wrong by doing that. Okay? I don't believe the Bible says they should be doing that. Okay? I get questions all the time. Choose a side. Fuck you. I'm not choosing a side. Both of them are wrong. But Israel needs to stop doing that shit that they're doing because it's not justified for them to do that. They have no grounds to say that shit's theirs. It's not. There it is. I've said it. So when you have these polarizing events and you have things where People have their emotions, their faith, their religion, their way of life, their very life on the line. That's extremely polarizing. And if you are wrestling with that as a trader and you're starting out now, you chose to start when it's the most difficult. And the only thing I can tell you is what I'm saying here is you must seek indifference. And to the public eye, and I get it a lot of times, people from Iran, Muslims will come at me and say, shit, you should do this, you should condemn Israel. I do. But Iran's a problem too. When you're bombing shit both sides, you're wrong. And war's wrong all around. It's wrong. It's murder. Innocent people are always getting hurt. So as a trader, you have to balance that indifference. And if you have associates and friends, and like me, students from all different walks of life, different faiths, lack of faith, culture, everybody has their little thing they want to bring to it. And they want to see their teacher, their mentor, their buddy online see their side of the equation and side with them. And I'm going to be indifferent to it because I don't think history is going to be able to say both sides were right and nobody was really right. It's an unfortunate thing that's going on. But you have to anticipate these things happening, even if you don't give a shit about what goes over in the Middle East. That's a common consensus in the Middle East stuff in America. We all like to think it's on the other side. It's somebody else's backyard. It's their problem. But if you're going to trade, it's your fucking problem. It's your problem. You're going to have to contend with the volatility. You're going to contend with the backlash of all that stuff. It's going to affect the bottom line of what you spend your money on. You can make lots of money, but that money that you're spending, its buying power is reduced greatly because of the shit you're seeing. And you're going to say, oh, it doesn't bother me. It has nothing to do with me. You're an idiot if you think that. All of these things are going to come to everyone's shore, everybody's backyard. What you spend on items and goods and things, it's going to impact you, whether you're a trader or not. So, yes, I think to myself a scenario where having them at all-time highs on a Friday with all the shit that's going on, okay, it would be perfect to see that be the catalyst for a market meltdown. Am I calling for a crash? No. I'm content now. I will say this. I'm neutral. And I'll talk about this if I get a chance to do a review this night or tonight. If I can't, I'll do it tomorrow morning or whatever. But I'm neutral now. I have no targets. I have nothing to go on right now. I want to see how we settle, and then I want to see how we open up on Sunday. And then I'll watch how we work towards Monday's opening at 9:30. And then at that time, then I will build out an idea. But right now, I'm unplugged. I don't have an interest in seeing it go higher or lower because I don't care. My targets have been met. It's been met. So I'm satisfied. I'm satiated right now. I'm not looking for, okay, what's next? You got that right. Okay, did that. Now what's next? I'm indifferent. I don't care what the market does right now. I don't care what it's going to do when it opens up. So when we talk about what we're supposed to be doing and what we're aiming for as a trader, obviously the profits are a derivative of doing something correct and staying within a model that yields that type of result. But your goal really is to be indifferent to the outcome in every aspect. And that's a very hard thing to communicate because in the beginning, you think making money is the success, when that's just one default response to you doing what is correct. Managing yourself, managing risk, managing your equity, and not over leveraging, not over trading, not trading outside your model, not tinkering with your model, not going into it with the emotional stimuli that your life brings to you. And you come to the altar of the markets and say, God of open, high, low, and close, bless me. Because that's a dumb God. That doesn't exist. But you end up creating a religion within yourself. And it's a faith-based methodology of you thinking that you're in connection with this deity that is the open, high, low, and close God. And it doesn't exist. And you fool yourself into thinking that that's the transaction and the ebb and flow that you should have as a trader. And that's not it. That's not it. Knowing what you're looking for, knowing what is not valid, what's real jade, what's a real setup, what's a real setup in your model. If it's not telling you that that's what that is, why are you trading? You're not doing what you're supposed to be doing. And you have to have those boundaries in place because a toddler left to its own decisions, it doesn't have the idea of consequence yet. It doesn't have a punishment capacity understood yet. It doesn't know that. That's why babies love being thrown up in the air in the beginning because they love that feeling of, woo, it feels good. But the first time they fall over and bump their head, now they're going to be scared every time that happens. And only daddy or mommy can make them feel comfortable if they're tossing them up in the air because they trust this being does this for them and they never let them fall. So they can enjoy it. But anybody else says, here, jump into my arms, they're not going to jump. Why? Because that doesn't fit the fucking model. The model says this is unsafe. And you got to go back to simplistic things. Where is the catalyst for you to get in? What are the protocols that say I can't be a part of this? And by aiming for indifference in all aspects, you will master yourself, you'll master money, you'll master the market because of your model only allowing you to do that cookie cutter shark punch into it, and that's all you're expecting to take from it. You're not going to try to get the weekly high. You're not trying to get into the low and get out the high. You're not going to do those things. You just want a piece in the middle and be content with that. And when you have a trade and you lose, stop. Tape read. That will fix your desire to feel like you got to go back in there and do something. If you do it wrong again, you didn't lose more money. If you win again, that rewards you with, see, your model's not broken. It's still there. You just didn't capitalize that on that time. And it teaches you not to think about every transaction as the last trade of your career. And if you live like that as a trader, over time, time builds all that foundation and you'll be much stronger in for it. Hope you had a wonderful week with me. Enjoy your weekend. Be safe. And Lord willing, I'll be back again on Monday and we'll do it all over again.
Have a great one, everybody. This is Trader Roundup. Thank you, Michael. Friday, post ICT live stream, April 17th. Have a great one, everybody. See you at Trader Roundup, 3 o'clock.
Take care, kid.
Have a great one.
Thank you for the opportunity, Keith.